Okay, let's dive straight into this AMD explainer. Welcome back to the Noob Selling Options channel, everyone. Man, what a wild ride it's been. We're breaking down one of the most explosive market reactions we've seen all year. AMD just dropped their Q1 2026 earnings, and wow, the resulting price action has literally sent shockwaves across the entire tech sector. We're talking a massive surge, a total shift in the AI narrative, and now a pre-market price hovering right around $423. And I know, that price tag has a lot of retail traders sweating with some serious FOMO right now. But hold on, my goal today is to walk you through exactly what happened, what was said during the keynotes, and why jumping in right this second might actually be a massive trap. But real quick, before we tear into this massive earnings beat, I just want to say a huge welcome back to the whole Noob Selling Options community. If you guys appreciate these deep dives where we cut through the hype and just look at the cold, hard data, do me a solid. Hit that like button and subscribe to the channel. It really helps us out, and it makes sure you never miss an explainer when the market gets this crazy. All right, let's get into it.
So here's our roadmap for today. Number 1, the massive earnings beat. 2, entering the agentic AI era. 3, the PEG ratio calculation. And 4, the $423 FOMO trap.
Section 1. The massive earnings beat. Smashing expectations. Okay, so AMD didn't just beat expectations here, they completely crushed them. Wall Street was looking for top-line revenue of $9.89 billion. AMD delivered a staggering $10.25 billion. That is a 38% jump year over year. And on the bottom line, earnings per share came in at $1.37, easily beating the $1.29 estimate. But honestly, what really poured gasoline on the after-hours trading, sending the stock up over 16%, was the forward guidance. They put out a Q2 revenue target of $11.2 billion, just blowing right past the $10.52 billion consensus. This is absolute proof that AI infrastructure demand is accelerating, not slowing down.
And then there's this number, $5.8 billion. This represents the revenue from AMD's data center segment alone. That's a 57% year-over-year increase. If you're wondering what the real engine behind this breakout is, well, it's right here. This proves that mega-cap tech infrastructure demand wasn't just some pandemic-era fluke. It's expanding rapidly as these tech heavyweights build out their computing fortresses.
Let's break that data center dominance down a bit more, because it's fascinating. AMD's server CPUs hit an all-time high for the 4th straight quarter, with EPYC processor sales growing over 50% year-over-year. Think about that for a second. AMD's server CPU revenue actually surpassed Intel's total data center revenue for the first time ever. That is literally a historic changing of the guard. At the same time, their Instinct GPU shipments are ramping up aggressively as more hyperscalers adopt them. But hey, it wasn't just the data center pulling the weight. The client segment had a killer quarter, growing 26% to $2.9 billion thanks to Ryzen demand, while gaming gave a modest 11% bump to $720 million. All right, Section 2. Entering the agentic AI era. Lisa Su's keynote. During the earnings call, CEO Dr. Lisa Su basically pivoted the entire narrative. She wasn't just talking about playing catch-up with NVIDIA anymore, she was talking about dominating the next specific phase of computing. She explicitly said that while the first AI boom was all about centralizing the training of massive large language models, the explosion in demand we're seeing right now is, quote, driven by inferencing and agentic AI. Basically, AI agents need continuous, real-time compute and massive memory bandwidth to make distributed decisions on the fly. And hyperscalers are absolutely scrambling to get their hands on hardware that can handle these rigorous, highly specific workloads. To meet that crazy demand, Dr. Su gave us some really aggressive updates. Engagement around the upcoming MI450 series accelerators is strengthening fast, with forecasts already beating their own internal expectations. But the crown jewel of the whole call, a massive 6-gigawatt deployment deal with Meta. That is enough power to run a small city. And they aren't just tossing chips into a server rack. No, this pairs the new MI450 GPUs with 6th-gen EPYC CPUs on AMD's custom Helios rack-scale architecture. So what does that actually mean for us? It means major tech players want the whole shebang, full rack-scale solutions directly from AMD. Plus, she assured everyone they've locked down the supply chain to scale up big time in the second half of the year, capping it all off with a wild, long-term growth target of over 80% specifically for data center AI.
Moving on to Section 3, the PEG ratio calculation, the cold, hard math.
Okay, let's ground all this hype in reality and break down the math for that pre-market price hovering around $423. For the option sellers and careful traders in our Noob Selling Options community, we absolutely have to look at the PEG ratio, the price to earnings to growth ratio. Step 1, we find the forward PE. We take that $423 price divided by the 2026 consensus EPS estimate of roughly $6.64, and we get a forward PE of 63.7. Step 2, we look at the 5-year expected EPS growth rate. This blends the hypergrowth AI data center stuff with the slower client and gaming divisions, giving us a compound annual growth rate of roughly 31.4%. Step 3, we calculate the PEG ratio. Divide the PE of 63.7 by the growth rate of 31.4, and we land at a current PEG ratio of approximately 2.03.
So, what does a 2.03 PEG ratio actually mean in the real world? Well, in textbook finance, a PEG of 1.0 is considered fair value. So yeah, 2.03 is technically expensive, but in today's mega-cap US tech landscape, a 2.03 PEG is essentially the standard premium the market demands for a company with a verified, physical moat in AI infrastructure. You're paying up because the barrier to entry for any competitor is basically zero. Actually, scratch that. I mean, the barrier to entry for competitors is virtually insurmountable right now.
Which brings us to the most important part of this explainer, Section 4, the $423 FOMO trap, navigating the danger. Listen up, because I am speaking directly to the retail traders watching right now. Jumping in fresh at $423 is a textbook poor risk-reward setup. At a forward PE of 64, this stock is priced for absolute perfection. The market has already priced in a flawless, zero-hiccup rollout of the MI450 and that massive Meta Helios deployment. There is literally zero margin of safety here. If we get a macro headwind, or even a tiny upstream supply chain delay of a few weeks, that premium multiple is going to contract violently. Plus, on a technical level, chasing a 16% parabolic gap up means you're buying into peak euphoria. Stocks almost always retrace to test previous resistance or fill that earnings gap. If you buy at the absolute top, you're forced to absorb that totally predictable short-term pullback, putting your trade underwater from day one.
It all boils down to skewed asymmetric risk. The major catalysts, the historic earnings beat, Lisa Su's incredible guidance, they're already baked into the price. The cat's out of the bag. So your upside reward from $423 in the very short term, it's probably capped at maybe $5 to $10 of residual momentum. But on the flip side, the downside risk of the stock dropping back toward its pre-earnings baseline is huge. You're basically risking a $30 to $40 drop just to scrape together a few bucks of upside. Guys, that is just not how we survive and thrive in the noob selling options community.
So, I want to leave you with this final, crucial question. Are you going to let FOMO dictate your trades at $423, or will you have the discipline to sit on your hands and wait for the inevitable gap fill? Look, AMD is a phenomenal company. They're literally reshaping global computing. But remember, a great company doesn't always equal a great trade at any given price. Stay patient, stay disciplined, and let the market come to you. Thank you so much for hanging out with me for this explainer. Make sure you've liked and subscribed, and I'll catch you guys in the next one.